am Dr. K. Prabhavati. We are going to see about the topic management accounting. Management accounting refers to accounting for the management. In every organization, they need to know about the information related to our concern. So, accounting which provides the necessary information to the management for discharging its functions. Management accounting is the presentation of accounting information in such a way as to accounting information to assist management in the creation of policy and in a day-to-day operation of undertakings. The functions of management are directing, controlling, coordinating, organizing. These are done successfully with the help of the accounting information. Thus, management accounting provides the information related to the management, that planning, organizing, directing, controlling of business operation can be done in an orderly manner. Next, we will see about the definition. According to the American Association defines management accounting includes the methods and concept necessary for effective planning, for choosing among alternative business actions, and for control through the evaluation and interpretation of performance. Next, we will see about the scope of management accounting. The scope field of management accounting is very wide area and broad based, and it includes within a fold a variety of aspects of business operation. The main aim is to help the management in its operation without a well designed program needed information through to done a successful functions. Then let's see one by one what are the scopes we concentrate our functional management. First one, financial accounting. Financial accounting is a recording of business transaction in the books of prime entry. In every organization, they want to know about the daily transaction and also they want to record them in each entry. Why? Because it is necessary to know the daily transaction. It is helpful for to know the end of the year, to know the profit or loss, or how much we get the assets, or we have to pay the liability. So these are all things known from the basic accounting information. So the prime entry, and then posting them in ledger and balancing them and preparing a trial balance based on these day-to-day transaction, that is journal entry. This all are needed to prepare the trial balance. Then profit and loss account showing the results of the business, and also balance sheet debuting the assets and liabilities of the concern. Thus, in terms of forms, the basic for analysis and interpretation for furnishing meaningful data to the management. Hence, management accounting cannot control an operation without a well-designed financial accounting system. In this sense, financial accounting is a proper method and procedures we have to follow. Then only we can take it from the accurate day-to-day transaction, and also we have to post them in a ledger in each transactions. That is, each account we have to prepare a separate ledger account. From that we have to prepare the trial balance. In that trial balance we have concluded the final balance sheet, whether the company has got equal balance or deficit balance in that concern. So it is necessary to prepare financial accounting. Then next we will see the cost accounting. So costing is a branch of accounting. So here it is, we have many branches, like it is standard costing, marginal costing, budgetary control, inventory control. So many accounts we have prepared. Then only we know the inventory at what level we have to take the inventory level. In the inventory level, we have to separated maximum reorder, minimum reorder, then average reorder. In all those things, we have to prepare the reorder level, that is inventory control. Next, it is a process and techniques of ascertaining cost. We have to prepare the cost unit. We have to prepare the each product unit cost. So we have to maintain proper process and techniques. Then, and also it helps to prepare the decision making process. So planning is effective tool to run a business. Then, and control are the basic managerial functions. Then cost accounting system provides the necessary tool such as standard costing. Already I said standard costing, budgetary control, inventory control, managerial costing for carrying out such functions effectively. Next we will see budgeting and forecasting. Then budgeting means expressing the plans, policies and goals of enterprises of a definite period in future. Forecasting, on the other hand, it is the prediction of what will happen as a result of given set of circumstances. So budget, already we have all known about the budget. It is a future plan. We have to plan for future. In every organization, they want to know about the current situation. So from that current situation, we have to predict or plan for the future event. Then only we have invest more amount, or we have to exclude the unwanted expenses, or to reduce the cost. So all these we want to prepare the budget. Then forecasting is other hand, it is a prediction of what will happen as a result of a given set of circumstances. Then forecasting is the other hand, forecasting is the sense we have to predict something related to future. So targets are set for different department and the responsibility is fixed for achieving these targets. So we know the budget and forecasting, then only we fix to target. Next year we are going to achieve something, so we have to fix the target, then we have to prepare the budget, then from that we have fixed for individual responsibilities or department responsibilities. So from that responsibilities we have to achieve the targets. Next, statistical methods. Statistical tools such as graph, chart, diagram, pictorial presentation, in-text number. These tools highly helpful to predict the current or correct number, accurate figure it is given to statistical tools. It is very helpful to the management to predict something related to current and plan for the future. Then it information is more impressive and comprehensive. It is highly useful for planning and forecasting. This statistical tools is highly useful for the management to prepare the plan and future course of action. Next one is the inventory control. First and foremost, or a most important thing is management is inventory. In every organization, they have to maintain some inventory for running their business. Some raw materials they have to invested. Then are some inventory they have to maintain till the process is end. So inventory is the main sources of organization. It includes control over inventory from the time it is acquired till its final disposal. When we have to dispose the product, till we have retained or maintained some inventory till the final product is finished. Inventory control is significant as it involves large sums. The study of inventory control will be helpful for taking managerial decision. Next one, interpretation of data. Then we all together all the information as its beginning to till end. Then all the informations we have to submit the management for interpreted one another. Then analysis and interpretations of financial statements are important part of management accounting. Financial statements may be studied in comparison to statement of earlier periods or in comparison with the statement of similar other forms. Then interpretation of data in the sense we have to compare the earlier then and current records. Then we have to compare, then only we have to predict something related to that particular informations we have to submit the management. Next one, reporting. The interpreted information in the form of quantitative expression must be submitted to or to be communicated to those who are interested in it or to whom it carries vital importance. The data should be communicated within reasonable time. Delay in passing on the data makes data useless. Report may be sent monthly, quarterly and half yearly, etc. In that sense, report means we have submit the information to the management. The information is we have to submit the correct date. Then only it will helpful to the management to prepare the plan for the next year, or we have to take something related to business. So if the time is delay, that is we have to submit the delayed information, it is useless for the management. Next one is tax accounting. Income statements are prepared and tax liabilities are calculated. The management is informed about tax burden from central government, state government and other local authorities. This includes the computation of taxable income as per tax of law, filing of returns, etc. Then another important one is tax. If we need the information, then only we have to prepare the accounts. Then other purpose is we have to submit the tax. We have to submit or we have to show our income to the business. So we have to pay the tax. We have to maintain the proper records of our sources. Then only we have to pay the correct income as per income tax law. Next one is methods and procedures. This includes maintenance of proper data processing and other office management services. So from starting to till, we have to maintain or we have to prepare some statistical tools or methods or procedures or accounting format. Which one is needed, we have to prepare from that format. Then only it is easy to conclude or easy to take the available resources from that particular informations. So we have to prepare the as it is given in the format. So reporting on the best use of mechanical or electronical devices. So we have to submit the information to the mechanical wise or technical wise or electronic wise to the management for rectifying their errors or needed, they want to need something related to the particular informations. It undertakes special cost studies and estimation reports on cost volume profit relationship under changing conditions. Next we will see about the accounting. In management accounting, already I said that it is information, that is in oral informations or accounting informations, all that needed with the help of preparing budget or future plan. So accounting is a very important source of in every organization. So accounting is nothing but recording and analyzing, summarizing of transaction in the books of accounts. So we have to first prepare a record. In day-to-day transaction, we have to record each and every transactions. They have to maintain. Then it will be summarized. Then overall total, how much we have to pay, or how much we have earned. So all that we have to summarize in a proper manner. Then analyzing all the informations related to the transactions. So analyzing in the transactions, we have entered the books of accounts. In that books we have to refer and analyze the information as it is needed. In financial accounting, a businessman invests capital with the objective of making profit and thereby increasing his resources. He incurs various expenses and also he receives income from various sources. So in a businessman, he can start a business and also he invests many amount to that business. So it is also to increase our profit or to increase his or her resources, and also he wants to spend something related to particular business. So also he render or incurred so many expenses in that business, and also he receives so many incomes like interest, commission, like that he receives the income. Then effective management requires control over expenses to reduce the cost of operation and make the business profit. In every businessman, he invests minimum amount of capital and also to return back it's a maximum bulk quantity of profit, because it is mandatory. It is 1/4 we have to invest, then it's a 3/4 we have to return back. So in businessman, they want to reduce the expenses, they want to reduce the cost of expenses, then only he make the profit. Assets may be properly maintained to increase their profitability. Then he also maintain the assets, then only to increase her resources. Then they are required to produce business records to tax authority whenever needed. So the tax purpose, we have to prepare the accounts whenever the tax authorities needed or to submit the accounts, means we have to submit the accounts in front of tax authorities. Thus transaction have become so important, that is their recording has become necessity. So for the tax purpose, we have to submit the information. From that we have prepare the day-to-day transaction and prepare the trial balance and balance sheet. From that we have to submit the furnished information to tax authorities. The next one is accounting concept and conventions. Business entity concept, it is completely separate from the owners. Then it is necessary to record the business transactions. Next one is going concern concept. A firm is said to be a going concern when there is neither the intention nor the necessity to wind up its affairs the scale of its operation. Next one, money measurement concept. All the transactions are expressed and interpreted in terms of money. Next one is accounting period concept. State of affairs of business statement is interval. We have to choose the intervals for ascertaining the financial period and the operational results. Next, dual aspect concept. Every transaction has two aspects. One is a debit and another one is credit. Thank you.